Oftentimes our early stage clients will ask us, I'm going to raise a seed round. Should I sell equity or should I sell debt? Well, in focusing on equity, we often tell our clients, it depends, obviously, based on the terms you're offered, but one of the disadvantages of selling equity in your very early stages is that that's the time when your company is probably worth the least amount that it'll ever be worth, right? Because companies' value should grow over time, at least theoretically. So the problem with selling equity in those very early stages is that a very small investment probably buys a very large piece of the company. So our question for the founders is, are you willing to give up that large of a piece of the company to raise this little bit of capital that you need? The answer may be yes, and the answer may be that, we can get a pretty good valuation from our investors, notwithstanding the fact that we're at the really early stages. And if that's the case, then equity is probably the right answer. But if that's not the case, you may be able to find angel investors that would be willing to come in under a convertible note. The advantage of the convertible note is you can kick the can down the road in terms of valuing the company. The investors take a note that's convertible into equity at a later date. Now, often they want a discount, but if all they want is a discount or some amount of warrant coverage, that may still work out to be a better deal for you, and you may end up giving up less of the company through the convertible note raise. More commonly these days, however, angel investors are asking for caps on the conversion price of the note. Again, if the cap is reasonably high that is, you still may end up with a better valuation decision giving caps and doing a convertible note round than you would with equity. But if they're seeking sufficiently low caps such that you might as well just do equity, then equity probably is the right answer. And if that's the case, there is a set of documents in the world these days on the SeriesSeed.com website that a lot of angel investors have been adopting. And these documents have the advantage of allowing investments at the seed round in equity financings at a pretty reasonable price, particularly if the angel investors and the founders both are willing to accept the terms that are standard and set forth in those set of documents. Now, what we found is a lot of angel investors say up front, yeah, we want to use those docs, but in practice, they want to kind of beef up those docs and have it include a bunch of terms they're used to getting in Series A and Series B financings. And if that's the case, then an equity financing at the seed level is going to be pretty expensive relative to the money that might be raised. However, if the angel investors are willing to accept the terms that are set forth and not make a lot of changes and a lot of tweaks, then Series seed financings can be done for very little money and allow the investors the advantage of pricing the round now and allow the money to be raised without a lot of it being lost on fees.